Let me now bring on board Shashank Khade, Senior Vice President with Kotak AMC Portfolio Management Services. Shashank, morning. Thank you for joining us. Shashank, I guess there are two big stories this Monday morning. First, sell-off in gold, and what will happen to Infosys after Friday's gut-wrenching fall. You can choose which one you want to start with.
Yeah, no, I think, let's start with gold, because there were three alternative asset classes for Indian investor to invest in. One is gold, real estate and fixed income. Clearly the first, asset class has started to give some heartburn to Indian investors after a very long time. In fact, the Indian investors or consumers for that matter who have been, accumulating gold substantially, I think this is the first year where they're seeing a period of negative returns after a very long time. So clearly I think this augurs well for an asset class like equity at some point in time, because the asset allocation may start switching over to the other asset classes, which are maybe fixed income and real estate, and maybe equity should get some bit of the allocation at a later date, maybe a year down the line or 1.5 years down the line. But clearly I think this is a good sign for asset allocations to start shifting from one asset to the other. And most importantly, on the current account deficit side, it alleviates pain to a large extent. In the last 6 months we've been talking about the heightened I think historical high current account deficit. That if the imports of gold actually slow down from here, it will really alleviate some amount of pain on the current account deficit side. On Infosys, I think the earnings season has actually started on a weaker note. I think Infosys has given sort of a surprise negatively. If one were to look at this particular earnings season, I think the expectations of this earnings season are going to be low, because everyone knows that during the month, during the quarter of March, you've actually seen stress, slowdown in demand in a number of products and services. So this earnings season is expected to be weak. It all depends how the sentiments are during the earnings season, but by and large people are aware that there is going to be pressure on earnings, and this could be one of the weakest quarter which you've seen all this while. So I think the Infosys has started off, but the trend is that nowadays people actually go on to discount any negative news quickly. So in the same day itself we see a lot of sort of discounting of negative aspects immediately. I think that's how Infosys has behaved, and that's the reason why this huge reaction of 20-21% in one day itself. Having said that, we are in a no man's territory right now. The stock looks cheap. At the same time, there is no reason for it to be expensive. That's how it is, given the way that the volatility in the outlook continues. So I think Infosys will remain at a steep discount to TCS for some time, till the time the volatility abates in case of Infosys, and till the time TCS really doesn't disappoint. So I think there is a valid reason for this discount of 20% to remain as it is going forward.
Shashank, you were making the point about the selling that we've seen on Infi, but the fact of the matter is, after the 21% fall and 45,000 crore rupees in the market cap being erased in just one day, how much more downside can the stock see from here onwards?
The stock may not really present a downside in the near term, and the stock may. The only issue is that the stock may not really offer you positive returns quickly. I think over a period of time, as people start to understand the year, the way it progresses for Infosys, I think that's how the stock may actually react positively if things start settling down. But I'm not really sure whether in the near term there is any upside quickly. So I think the stock may consolidate. It may present a good opportunity to look at, provided the margins and revenue growth actually improve slowly and steadily throughout the year. So I think you'll have to play by the quarter in case of Infosys now.
Shashank, so I'm with you. I guess it's very difficult to judge in the near term where the buck really will stop for Infosys. But what about rest of the IT group? The fact that the management commentary from TCS and HCL Technologies of late has been quite uniform. Do you see in the near term TCS and HCL Tech will outperform Infosys? So the aggregate weightage for IT may not reduce. It's just that within the IT space the trade will even get more polarized.
No, it could be given the fact that people are searching for places to hide, and clearly IT and pharma remain, and consumer of course, remain places to hide. And there could be allocations away from Infosys into TCS, though there's a huge discount, huge premium for TCS, as well as HCL Tech also may actually there may be money is going into these names. Same is the case with Wipro as well. So I think these three large companies in IT clearly remain the place where monies may get reallocated for the time being, until Infosys really starts to improve on earning stability from here.
Shashank, what are your thoughts on autos? Because the street clearly is divided on how to approach autos. The bulls would argue that autos as a group, they are going through a cyclical downturn. It's a matter of time. Auto demand will come back. Those who are bears, they are of the view that there is intense price competition in the auto space. There is overcapacity and it will be a while before real demand will come back. Are you part of the bullish camp or are you part of the bearish camp?
See, auto sector is actually an interest rate sensitive segment, and clearly from a point of view of interest rates, they seem to be heading down slowly and steadily. So clearly at some point in time you may actually start seeing demand reviving. While there is increased competition, there will be at some point in time improvement in demand. And I think that's the single most reason why people tend to look at autos, because I think the consumer demand is going to be strong. Of course, the consumer is going to be pampered by a lot of choices to buy into. But that doesn't mean that the existing listed companies are going to really see a declining market share across various price points. You may see attrition in market share given the fact that there are unlisted companies which are actually getting far more aggressive in terms of product launches. But having said that, I think the moot point here is the macro. And if you really look at the fiscal deficit, current account deficit, if these sort of worries start coming down, there is more headroom for RBI to cut rates. I think the rate of change may actually positively surprise us. Right now the way we are looking at it is throughout the year it will be slowly and steadily interest rate cuts may happen. If there are any front end interest rate cuts, I think it's going to really change the course of the auto demand as well, quite reasonably, quickly. And I think that could change and while the auto stocks have corrected already, given the fact that the March quarter was extremely weak, you may see the stocks bottoming out soon.
Shashank, what's the expectation now from Reliance Industries, which is slated to come out with its earnings this week itself?